the events of the past few weeks with Trump's tariffs and then ongoing sort of trade war with China and the fall in the stock market has highlighted a problem that a lot of people didn't think about before, and that is the value of their pension schemes, their pension plans, whether it be in the UK a personal pension, a work-based pension, a SIP, or in America 401k, because they're reading the headlines like trillions wiped off the value of stocks, and people's funds falling maybe by 10% in a day. So a lot of people are worried about this, and rightly so, because I've been talking about this for quite a few years about people having maybe all of their money in stocks and shares within their pension, or not even being aware of where their money is. So I want to talk about what you can do if you are worried. And as I had a guest on about this last week, also talking about this. And the first thing you need to do is really get some advice, because particularly in the UK here, we have just a system where you join a company and they say, well, sign here to join the work-based pension. And it makes sense because so you put in 3% and the employer puts in 3%. You can top it up as well. And that's great. That works well. But then you might forget about it and you're sort of in your 20s or 30s. And then a few years later, you thought, well, where is this money invested? How is it invested? And you might just put it in the balanced fund or the managed fund, and that's the end of it. But you ought to know a bit more than that. And I think a lot of people now are not getting financial advice. The numbers of financial advisors now is probably a low, certainly since I can remember, the amount of financial advice out there. Or they're not willing to pay a fee-based financial advice. They don't want to pay for advice. They think you should be just giving them for nothing, or they just can't be bothered. But I think you do need advice to start planning. As my guest recently, Tim Smith, was saying, people who are coming up to retirement, maybe within 5 to 10 years of retirement, should not be exposed to a market fall. They should have rebalanced their portfolio, maybe put some into fixed interest securities and leave some in stocks that they're not that worried about. But in terms of having all your, say, 80% in stocks and shares, and you're 1 or 2 years towards retirement, is not the best position to be in. So the answer is really you shouldn't have been in that position in the first place. So if you're sort of 60 and you're retiring at 65, you shouldn't have all your eggs in one basket, if you know what I mean. So you've got to either learn how to do this yourself or go out and get advice. So that was what Tim was saying, and I would agree with that. You shouldn't be in that position. But if the market falls, then and the value of your pension has fallen, because most pensions are invested in stocks and shares. People say, I don't invest in the stock market. Well, do you? I mean, you're probably in that by virtue of the fact that you're in a pension scheme. So if the market has fallen, like it did in, say, 1987, like it did, there was another one in the 99 kind of crash, the dot-com crash, and then in 2008, well, all of those corrections or crashes eventually corrected themselves, and the market went up and continued to go up from there. So if the market goes down and then you sell because you're in a panic, you think, oh my God, I've got to sell, it's going down, then you're probably selling at the worst possible time. And by the time you think about buying again, the market has bounced back up again and you're buying at a higher price, which is crazy. So I'm not saying do nothing and just forget about it, but don't panic if the market has gone down. I mean, as it happens, the market has sort of bounced back from a couple of weeks ago where it did fall, but it only fell by 2 or 3%. It didn't fall like say in the stock market, the financial situation where the financial 2008 financial crash, where it did fall a lot more. And even during the when the lockdowns were on, we saw markets fall at that point by over 30%. But within a couple of months, they'd all gone up again and have done very well since then. So the market didn't fall to that degree with these tariff wars and trade things going on. So there was not that much to worry about. But a lot of people did start to worry and think, well, it could go on and on. Where's the bottom going to end, if you know what I mean? So I think the first thing is take advice. Try and find a good independent financial advisor that can help you with this. if you need one, I do know somebody. They work on a fee basis, and you might want to look at that. But there's a lot more to financial advice. There's a lot more to financial planning. There's saving for pensions, but there's making sure that eventualities along the way are not going to scupper your plans, and that involves using insurance or some sort of contingency plan. There's tax planning. There's wills. There's putting your assets into a will or a trust to protect it against tax, and there's all sorts of things that I think it's a whole range of things. It's not just about saying, well, I've got a pension plan, I've got some life insurance. There's a whole range of things to look at. But one of the things I recall from my podcast interview with Tim was that, if you just put aside 10% of your salary and you maintain that throughout your life, as your cost of living is, as your standard of living is going up and your salary is going up, if you always put that 10% aside into your pension and then the employers add into that as well, you will be able to retire early. You may not be a billionaire, but you'll be able to retire early. And also, if you can live within your means, live within your means, and you can save a percentage of your income. 10% is really just a starting point, but if you can live on 90%, 80%, 70% of your income and save the rest, then you can become wealthy just doing that. And I know a lot of young people think, well, I can't think about pensions because I've got to save for a house and that sort of thing. But that is another story. But you've still got to be able to save. You've got to put the 10% is the basic that you're saving for your long-term retirement, and you've got to also put something aside if you want to save for your down payment on a house or your first property. And that means making some sacrifices. It means not going out all the time, not spending all your money on gadgets and stuff and fast cars and that sort of thing. You've got to be able to show some sacrifice. And I think that's where maybe the problem lies. A lot of young people feel a bit hopeless. They feel that, I can never buy a house, they're too expensive, and so on. Or, the older generation have got all the houses and it's not fair and that sort of thing. Yeah, things are a bit tougher today. Although, on the other hand, there's a lot more opportunity around today, but things are very competitive. They are tough. Price of things have gone up, and it is difficult. But you can do it. If you get yourself educated, get a job, or you're running a business, or whatever you're doing, and then you learn to control the spending. And I put some tips on this in my webinars, which I have on a most Wednesday, usually once a month on a Wednesday evening. And we talk about how to get a handle on your money, get control of your money, so that you know where your spending is going. If you can do that and put some money aside for your medium-term goals, which might be to buy a property, and your long-term savings, which is for your retirement, then things can work out for you. Things will work out for you. And it's as simple as that. Most millionaires and most multimillionaires have not done it by being a sports star or a celebrity. Most of them have done it by working, saving a percentage of their income, living within their means, sometimes not living so frugally that they're worried about the price of toilet roll, but living within their means, living well, but not spending recklessly. And they've been able to acquire £1 million or $1 million in savings or assets and retire comfortably. I've seen it so many times when I was a financial advisor. I saw people earning lots of money but spending more than they earned, and I saw people earning modest salaries but still able to save for retirement, have a good standard of living in retirement. Some had bought 2 and 3 properties along the way, and they were on very modest incomes. So it can be done. So don't despair. Despite the doom and the gloom that you read in the newspapers every day, things are not as bad as you think. I see a lot of things like saying Britain is broken. I think it's the Reform Party keeps saying that Britain is broken. Britain is not broken. It's not broken. Of course, it's got problems here, but it's not broken. It's got a good future. We're one of the top 10 wealthy countries in the world. Yes, there are problems here, and taxes have gone up and that sort of thing. But to say Britain is broken is nonsense, and it's very negative. This other phrase that's going around, awful April. What a thing to say. April's a lovely month. I can look out the window and I can see sunshine. We've had the cold March winds. Now April's coming. You feel like spring is in the air. Blossoms are blooming on the trees and cherry blossom trees. And it's a nice month. Yeah, prices have gone up, some bills have gone up, but I wouldn't go around saying it's awful April, it's awful April. What's going to be next? Miserable May, miserable May. I mean, it's just a load of crap, really. Try and stay positive. Think about the things that are good in your life. Think about the things that make you feel good, and you can find that you can be happy with what you've got. Sometimes you don't have to think, well, when I get $1 million, when I get the house I want, when I get the car I want, then I'll be happy. You've got to be happy along the way, and that there are lots of techniques for just finding, just being happy as you are, and thinking about the good things in life rather than focus on the negative. Because if you just think about your problems more often, if you focus on your problems, what's going to happen? You will just get more problems. It's just the law of nature. If you keep thinking about all the things that go wrong, guess what happens? Things go wrong. Now, it may not be that anything extra is going wrong than would have done, but you just see everything. You see all the bad things. You see all the things that are going wrong. Things are going wrong all the time. But if you're focusing on the good side of things, you will see more of that. If you're focusing on the positive, which doesn't mean ignoring everything, but if you're focusing on the good things in your life, you're alive, you're breathing, you're living in a country like the UK or wherever you live, and there are good things about it and there are bad things about it. But if you just focus on the good in life, focus on the good, and the things that you are fortunate for, then I think that's a good starting point. I mean, obviously there are things here like high tax millionaires leaving the UK at the same rate as Moscow. So what they're saying is that thousands of millionaires. I talked about this a few weeks ago. Thousands of high net worth people and millionaires are leaving the UK and going to live in Dubai and Portugal and whatever. Yeah, that's true, but it doesn't mean the country's finished. I know they've taken a lot of money with them. In fact, it's not a good thing what Labour have done with tax, because some of these people pay the amount of money they're losing in tax runs into billions, and that doesn't include the people they employ in this country as well. So it's not a good thing, but it doesn't mean Britain is finished. A lot of those people will probably come back. It doesn't mean that they'll never come back. They'll probably get fed up living in Dubai in 40 and 50 degrees. And what are they going to do anyway out there? Where's the culture? Where's the things that we have here? We have a lot of good things going for us here. So I wouldn't get carried away by that. And I see this guy on TV, Charlie Mullins, the guy from Pimlico Plumbers. It's always on TV. Go, oh, UK's finished. We don't need you anymore. But I don't think that's anything to do with Labour, because he'd sold his business, Pimlico Plumbing, quite a while before Labour come in. He'd sold out, cashed in, got his millions, and now he's leaving to protect that wealth. He's built his wealth in London, and now he's on TV the other day saying, we don't need London. We can set up businesses in Dubai, I can set up business in Portugal, and I can set things up online and all that sort of thing. But it's a little bit of nonsense. He made his fortune here. He made his wealth here during high tax periods and non-high. The amount of tax we're paying is not that much higher than we were paying under the Conservative government. The debt from when they gave a load of money away has to be paid off. So it's a bit disingenuous of him to say, well, everyone should leave the UK or the UK is finished. There's problems, but when if he gets arrested in Dubai, or he gets into a bar brawl with a local, then see what he says, because there won't be any human rights. He'll get banged up. You're not going to have the same rights. It's just a fact. You're a foreigner there. You'll never be accepted as a local in Dubai. Sure, they want his money. Yeah, bring your money here, put it here and invest it here. But as I said, he's linking his leaving the UK to just Labour, and I think he was probably planning that anyway, as maybe many others. If you've made your pile of money, then maybe, that is the time you want to protect it from tax. That's fair enough. James Dyson did the same thing. Richard Branson lives on his own island. He doesn't pay much income tax in the UK. His companies pay billions in tax. But that's fair enough. But for the average person, this is still a good place to make money, still a good place to run a business. And that's why millions of people want to come here. They're coming here on a boat every day, just a raft to get across the sea, just to get here. I know a lot of people say, well, they just want benefits, but a lot of them don't. They want to build a life here and work and maybe start businesses. So there you go. I just wanted to put that. Don't panic about the pensions. Get advice, and don't sell just after the market's fallen, because that's not always the good way. So get advice, and keep your head above water and stay positive. This is not awful April. This is wonderful April. Okay, so bye for now, and I'll see you soon. Thanks a lot.